And we are live. Welcome to the Noble Credit Podcast. I'm Noble Credit. Today we're going to be talking about 5 reasons why you should use your VA loan in 2023. Now, first, let's talk about what a VA loan is. A VA loan is a Veterans Affairs loan. No, it is not issued by the Veterans Affairs. However, it is backed by the Veterans Affairs. And what does that mean? That means that you can go to a lender, let's say your local bank, and they can issue you a VA loan. Now, there are cons and then there are pros to issuing you a VA loan. The cons list is very small. The pros list is very big, especially for the lender, because although there's no down payment, which brings us into reason number one why you should use a VA loan. There's no down payment required. All right. You can have a down payment, but it's not required. So this is uh, in conjunction, or there are a few other different type of loan vehicles out there. Conventional loans, FHA loans. You can have some portfolio loans. You can have some jumbo loans. There are a few loan vehicles out there. The VA loan is the only one that I know of that requires a $0 down payment. There's no requirement for a down payment, which means more of that money is going back into your pocket. Now, why does the Veterans Affairs Office guarantee your loan? Well, it's a thank you for serving on active duty status, or if you're a reservist, or if you're a veteran. It is basically a thank you for serving your country. Now, in order to be eligible as a veteran, you had to have gotten out of the military with an honorable discharge or an other than dishonorable discharge. However, uh, the VA loan is going to be the best vehicle for you to be able to use in order to build wealth in this country. It's the easiest method, I think, to build wealth in this country because all you need is a serviceable credit score and you can start building wealth. You can start building wealth that you can hand down from generation to generation because majority of the wealth that's passed down in this country is passed down through housing. So housing inheritance is the biggest uh, passer down of wealth, trusts in estates, those types of things, and houses keep their value most of the time. Okay, so 9 times out of 10, a house is going to be the biggest investment that someone makes. Now, there are going to be different schools of thought about this. Is a house an investment or is a house a liability? Is a house an asset? Listen, you are going to have to come out of pocket with some expenses every now and then for a house. But if you if you treat a house as an asset, it can pay you for years to come while building equity for you. Equity is the difference between what your house is worth and what you owe on it. So, the more you're paying down your home, and housing, generally speaking, over the years increases in value. Now, we've had some hard times these past few years with with just the pandemic and what's going on in the world. We've had some difficult times where now housing prices, or at least last year, housing prices were shooting through the roof. And so since then, there's been more of a cool down where housing prices have had to come back down, and there's been rate spikes. And I'm going to talk a little bit more about that later, but that's not been good for the housing market. However, though, at this current point in time, getting into the housing market, getting into a house in 2023 is still going to be a good choice because of the slowdown that occurred when housing was at its highest that it's ever been. Unfortunately, or fortunately, rates haven't been as high as they've ever been. So even though we have these what are deemed crazy interest rates, those interest rates are actually still below record lows. Like the average interest rate for housing, uh, even 50 years ago, was 8%. So, us being at 6% right now, we're still below even historical averages. So, we were a little spoiled during the pandemic a few years ago when rates went to below 3. And that's when a lot of people got really lucky. But then a lot of people also suffered because rates were so low, and during the pandemic, the pricing of lumber and things that you need to build houses, that went up because those elements were in less supply. So there's a supply shortage and the demand for those supplies increase. Therefore, the price of those supplies increase. Therefore, the price of housing increase. And when the price of housing increase, along with rates increasing, that's a recipe for a market that you don't want to be in. That is why right now, with rates still on a hike, but housing prices has gone down. This is still a time where you would want to get into the market. All right. So I wouldn't listen to anyone on the internet saying run away from the housing market, it's going to crash. I wouldn't listen to any of that stuff. That's for those people are just trying to make money off AdSense pretty much. So if you are active duty military, veteran, a reservist, and you're listening to this channel and you're interested in getting a VA loan in 2023, I'm here to tell you that now and pretty much for the rest of 2023, it's probably going to be in your best interest to get into a home, especially with what the housing market has done as of late. At the end of 2022, the housing market pretty much cooled down cooled down to the point where the price of housing had gone in some markets. I was just looking up in Salt Lake County, Utah, one of the highest markets in the country, at record highs. They were at around uh, over $600,000 for the median single family home. Now, or when the data was collected for February of 2023, those prices had gone down over 90,000 for median home prices sold in February of 2023. So, as you can see, the pricing of homes has cooled down, probably because those elements became more in supply. They couldn't overcharge as much, but also because demand for housing, while you're always going to have demand for housing, people need places to live. The supply, like, we still are short on about 4 million homes in this country. So, and people that can afford to get a home with the high interest rates, because even though, we've had higher interest rates in the past, housing has never been more expensive. That's one thing that we forget about when we think about how interest rates are still relatively low compared to historical interest rates. By the way, if you're watching, hit the like button for me. Really appreciate that. This is the Noble Credit Podcast, and we're talking about the VA loan today. And let's get into reason number one. There is no down payment when you're using a VA loan. Now, what does this mean? Does this mean that you can move into a home with no money down, as if, basically the government just paid for you to move into a place? Yes. Yes. It's similar to moving into an apartment without having to pay a security deposit. I would equate it to that. So you can realistically, as a veteran or an active duty service member, you can realistically move into a $300,000 home and not pay a single cent in down payment costs. This is this is the number one major benefit to the VA loan, in my opinion, because it allows you to not have to save up for a year for these high mortgage costs. Remember, mortgages have the price of housing has increased pretty much year over year, except for the sharp increase during the pandemic and then slight downturn. The price of housing has increased. So what does that mean? That means the average buying power for the average person has decreased because wages have not kept up with wages have not kept up with inflation, and wages have not caught up with the housing market. Now, the housing market, you have homes that nowadays would sell for over a half a million dollars when 15 years ago these houses would sell for like a quarter of $1 million. All right, so there's been a huge boom in the housing market, huge boom in the price of housing, but the price the affordability of the homes has gone down. So that's why if you're someone lucky enough, let me repeat that and hit the like button for me. If you're someone lucky enough to be able to move into one of these 300,000, 400,000, half a million dollar homes with no money down, you should take advantage of it because no one else out there has that advantage over you. Now, this can help you in more ways than it can hurt you, but I will say this. Anyone not in the military, anyone who doesn't have access to the VA loan, they wish that they had that. So that's why more times than not, you're always probably going to be in a better position than someone who doesn't have a VA loan by using it and not having to come out 30,000 or 100,000 in some cases because with conventional loans, you have to come out of pocket 20% down. A $500,000 home, that's $100,000. Okay. So just take 500,000 and divide that by five. That's how much you have to come out of pocket for a conventional loan on a $500,000 home. And a $500,000 home isn't really, it sounds better than it is. All right. I live in the DC, Maryland, Virginia area. This is an expensive area of the country to live in. This is not like, somewhere in middle America. If you want to 500,000 is basically par for the course here. All right. Especially for a nice home. So let's get on to reason number two why you should use a VA home loan. There are capped closing costs. So there are restrictions on what lenders can charge you in the form of closing costs. If you've ever bought a home before, once you get to that closing table and you see all these closing costs, or once you get a loan estimate and you see closing costs, you don't know anything. You don't know all of these charges. You don't necessarily know if these charges are even legal a lot of the times. So I'm trying to tell you there are caps on the amount that they can charge you for closing costs. There are some restrictions. Lenders are not allowed to charge you some of the closing costs that they can charge other non VA home loan buyers because what's to stop them? Well, you have to actually be accredited to use the VA loan. So or to be able to issue out VA loans in the form of mortgages. So if they were to charge you uh, a restricted fee in their closing costs, they could lose their ability to sell that loan to you or to offer that loan to you as a borrowing tool. So that's the reason why that's the reason why they can you can rest assured that when you get to the closing table, that's what they can charge you. Okay. You can maybe try to negotiate, but sometimes uh, there's not really much negotiation with those numbers. But just rest assured that when those closing costs come in, they are capped. All right. Lenders can get away with way more with an FHA loan or a conventional loan, but just understand with a VA loan, closing costs are capped, and that only benefits you and not the lender. So, reason number three: lower barrier of entry. With a conventional loan, you should probably have a credit score in the 700s just to be safe. Not to be safe. Actually, you probably need a credit score in the 700s to use a conventional loan. One second. You probably need a score in the 700s to use a conventional loan. With an FHA, similar story, but a lower barrier of entry, a lower credit score required. With a VA loan, though, you can get a VA loan with a 580. Not saying that that's ideal, not saying that you're going to get the best rate, but you can. Banks are also going to be willing to work with you if you have a lower credit score. Why? Easy. Their loan is backed by the government. So if you were to foreclose on it, the government still guarantees their loan. It still guarantees they're going to get their money. Unlike with a conventional loan where the bank has to charge you a down payment as like an insurance that you're going to continue to pay on the loan. uh, the VA loan is backed by the Veterans Affairs Office, so it's backed by the government, and that allows a lender to not have to worry about you defaulting on that loan because even if you did, they're still going to get their money. That's the benefit of a lender lending out VA loans to service members. So, number four, buying power. The buying power of a VA loan is a secret weapon because you could realistically get away with maxing out your buying power, especially in counties where the VA loan limit is extremely high. If you have your entire entitlement, if you have your entire entitlement, the there are some counties in this country where you can buy $1 million home. Now, you have to be able to afford the $1 million home, but you could still do it. So you have elevated home buying prowess with a VA loan. Now, should you necessarily spend all of your money on your loan? You shouldn't necessarily do that. But if you have the ability to, which goes into reason number five, house hacking. What does this mean? This means you could buy something called a duplex or a triplex with a VA loan, and you can live in one unit and you can rent out the other units, or you can rent out the other unit. This is going to allow you to be able to pocket the money, basically live for free, pocket all the money that you spend on the mortgage because your tenants who live in unit B and unit C or just unit B is going to pay your mortgage for you. This is very real. You're either going to live for free or you're going to live at such a discount that it doesn't make any sense. And then you only have to live in the house for 1 year and then you can move out. Let's say it's a duplex. You can move out and rent out the unit that you were moving in, use another VA loan to buy another house. And you could do the same thing. Now, this is all going to be dependent on debt to income ratio. You're continuing to have good credit, paying off your loan in time, but you can still do that. And a lot of service members do take advantage of this. Uh, also, with the house hacking, this is going to allow you to build wealth faster. One of the downsides of using a VA loan is or using um, buying a home as a measure of building wealth is that it's fairly slow. Okay. It's not an immediate gratification making a couple $100 here, a couple $100 there every year, or maybe a few thousand here and there every year. It's slow money, but eventually it builds to, give it a couple years, give it 10 years, give it a decade, and then you're going to see the fruits of your labor. When you house hack, you're going to see the fruits of your labor even quicker because now you have gotten one property, but you're doing what someone who bought two properties can do. And how long does it take to actually buy two properties? Well, normally in the military, you're going to move every 2, 3, 4 years. So it's going to take you that long to buy multiple houses. Whereas if you house hack, you're actually going to be able to purchase one home and then give me 1 second. Got to get these cats out of here. Welcome to the Noble Credit Podcast, by the way, if you're just joining me. Also, if you're joining me on the replay, do me a quick favor, hit the like button. Also, subscribe to the Noble Credit channel. On this channel, I try to teach you guys how to build credit, get the best credit cards, how to uh, use your VA home loan benefit. I try to teach you guys smart financial decisions. I try to give you guys hacks on the best strategies to navigate the credit card game. And also, another part of the podcast is I try to help active duty military service members uh, succeed in the military. So that's one of the things that I do on this channel. Back to VA loans, house hacking. So it's going to allow you as to make getting a building wealth quicker. It's going to allow you to purchase a single home, which is going to be a duplex or a triplex, and you're going to quickly be able to see the fruits of that labor. Whereas if you were to purchase three homes, that's going to take you, and you say you have to move every 2, 3, 4 years, that's going to take you at least 6 years to purchase three homes, just at a minimum. Whereas you could do that in one go. So that is a major benefit to the VA loan. Now, I've used VA loans in the past and I still do. And from my experience, the VA loan, if I didn't have it, there's a decent chance I probably wouldn't be able to move into the houses that I've moved into. So, and I'm also someone who has been relatively financially responsible in life. So, the the housing market is very real. How expensive it is very real. So, take heed to this advice. The VA loan is the best builder of wealth in this country, and I think it's not even close because buying a house is the best builder of wealth in this country. Having a house is the best builder of wealth. So if we know that owning a house is the best builder of wealth, what's the best mortgage vehicle? The VA loan. That's why you are so fortunate to be able to use this loan in order to build your wealth and to pad your stats and to pass down to your next generations and to actually make decent income, because once you own a property and you start renting it out, you are now a business owner. So this is part of your business now. Let me know if you have any questions about VA loans in the comments section. Also, if you are joining me on stream, do me a favor, hit the like button for me. All right. And then also subscribe to the channel, hit the notification bell to be notified when I go live. I'm trying to do these weekly live sessions about financial topics, VA loans. I might stick some more military centric topics in there, but we're trying to keep a pulse on what's going on in world news, world banking news. Um, yeah, let me know what you're interested in hearing. I'm just gonna come with the content like a fire hose. I'm just gonna keep coming with the content. All right. So stick around and enjoy some more videos, some more Noble Credit videos. Go ahead and check the channel, and I will see you in that next video. Peace.